So too maybe our next guest, Ed Yardeni of Yardeni Research, is with us again. And Ed, I have to say, you know, we've had many conversations, and I think I have a pretty good memory on what you've said. And something's really jumped out to me today, where you say, and I quote, "The bottom line is that even with our relatively optimistic economic and earnings outlook, it's hard to see the S&P 500 rising well into record territory over the next 2 years." Sure. Now, correct me if I'm wrong. I feel like you told me 3-4 weeks ago you feel like we're going to hit a new high next year, and I feel like that's changed.
Well, I worded it rather carefully, I thought, and the idea is that I don't think we're looking at a tremendous bull market up ahead here, given that valuation multiples are still quite high. And of course, as you said, there's a lot of controversy about the outlook for the economy, whether it's sort of soft or hard landing. I'm in the soft landing camp. I think earnings are going to go sideways for a while. I think it's going to be a stock picker's market. I don't think a passive investment is going to work as well. But the bottom line of my thinking is that I think we could be, getting to 4,800 by the end of next year. And but I don't know that we're going to go well above that. I think that's about as good as it's going to get.
Yeah, I know. Well above that. I mean, even 4,800, Ed, sounds like a pipe dream at this point in time. Well, you even suggested to me on overtime within the last week that we might get no landing, right? That the economy is so good that it just keeps humming along. I mean, I got Kalanovic over at J.P. Morgan saying that the Fed's going to kill the whole thing.
Well, so he's turned more pessimistic, and I've kind of held my own position here. Which is that the main difference between myself and the consensus is I think the consensus, and now we see Elon Musk joining that consensus, is the recession's coming. And my view is that the economy has proven itself to be remarkably resistant. Again, we're talking about a hard versus a soft landing. And what did GDP do today? For the third quarter, it was revised up to 2.9%. What's the Atlanta Fed saying about fourth quarter? It's around 4%. What is the data showing about the consumer? They continue to spend, and it's not just excess saving. It's not just that they're borrowing more. Payroll employment up 4 million people so far this year. And I think the big story up ahead here is wages are going to rise faster than prices. I think the big story is going to come, and you can challenge me on this the morning of December 13th. I think we're going to continue to get evidence, as Karen said, that inflation's moderating, and the market has demonstrated that that's what they want to see, and that makes them very happy, and that increases the likelihood that the Fed is pretty close to terminal tightening, and I think the yield curve suggests that as well.
Yeah, I'm looking at the rollover in the S&P as we're having this conversation. You know, you had Andy Jassy. I mean, he's the CEO of Amazon, of all places, okay? Suggests that consumers are being more careful. And these are his exact words. They're trading down, right? We need to be more slim. I mean, he's giving you a sort of dour picture of the economy that he sees lying ahead. And at the same time, a Fed chair who in an hour and 70 minutes is going to likely suggest that they need to stay the course.
Yeah, I think what the stay the course is going to turn out to be is that they're going to do maybe another 75 basis points. It could be 75, at the next FOMC meeting. It could be 50, 25. And then I think stay the course means that they're going to keep interest rates steady for a while at a relatively high level.